afternoon, everybody. My name is Peter Mullen, and I'm here to talk to you about our webinar from ACCC called Saving for Your Child's College. So I'd like to get us started right now. It's 4 o'clock here, and I thank you so much for joining us yet again. So just to start out, a quick intro about things. We welcome folks from 8 states today. Couple Massachusetts, New Jersey, New York, Ohio, Illinois, Pennsylvania. Thank you for joining us for wherever you might be. And today, just want to let you know, today we're talking about savings for college, but just as a quick announcement about things, we do these twice a month, two webinars. Our next one, if you want to put it in your calendar, is June 9th, same time, 4 o'clock, and it's all in the home buying process. So we, again, try to talk on different topics, and if anyone's interested to find out about more, they can always write me. My email is on the front here, pmullen@consumercredit.com. Please contact me after this for anything you want to know that we've talked about, or even questions about some things in the future. I work here at American Consumer Credit Counseling, and just so you know, we're a nonprofit in the Boston area that provides credit, housing counseling, debt management, and community education like we're doing today. We've been in business since September of '91, so we're coming up on our 30th birthday. As a bit of housekeeping, the way that we run these webinars, they last about an hour. Please know that you've been placed in a listen-only mode for now, but I certainly encourage you to participate. And so basically what I will do is at various times, I'll either ask a question or pose a question by simply saying, are there any questions? And at that point, it puts the ball in your court for you to respond. So that allows you to then either answer a question or raise your own. My colleague on the line with me, her name is Maddie, and she's going to help monitor any responses and questions you might have. We don't have a lot of people on the line right now, so I'm sure that the individuals who are here will be able to answer hopefully any questions that you raise and take the time for you. After our webinar today, as we always do, we will have a follow-up email, which is including this PowerPoint deck, so you can get it for yourself. A link to our webinar, should you want to watch or hear this again. You'll get a handout that we have. It's called Paying for College. It's a nice, compact handout that I found from one of our educational affiliates, and then an evaluation of what we've done. We always want to hear your feedback on things we've done. So please stay tuned, be ready for some good information, be ready with your questions. I'll open it up a bunch of different times to make sure that we've caught, you know, what it is that's important to you as much as we can answer. So let's get started with our session. So our goals for today, what we want to cover is 2 basic things. I'm thinking of simply exploring options on how you pay for college, various ways to do that. I always like to make sure that people have options, and that's always what my role is all about, helping you to know what's out there, hopefully giving you the pros and cons. And then also think of ways not simply just to pay for college, but how not to pay for college. What are some things that we can do to reduce some of the costs? What are some strategies and how to do that? So today we will talk about some of the purchase strategies, ways that you can do some financing. Some are probably pretty obvious and basic. Some maybe be a little bit more interesting. Ways to reduce costs. I like that one in the sense that it helps you think creatively. How can I, do certain actions, or your child do certain actions that allows them to get out of paying things? Always good. A couple cautions and risks, and then we will also do, again, just a summary and references for, as we always do. Again, you'll get this deck when we're done, so you can still take notes, love that, but you can get this as you leave this afternoon. The key word for all of this as we think about this is planning, and what that means for as you think about this purchase or any large purchase. It really is good for folks to think about these things way ahead of time. Obviously, the more jammed up you are, the less options you have. But the time when you have time to think, compare, ask questions, it gives you a greater opportunity to save and think of how you can pay and then how not to pay. So starting with considering college and other choices, I like to always play a little bit of the devil's advocate for this or any other topic and just simply say that, it's important for people to think about, that they really, really want to go to college, whether you're a parent on the line or one of the children on the line, there's a lot to think about that I hope that folks are considering beyond simply just the money part. The money part is very, very important, of course, but there are no guarantees. So I want to share with you this quote that I have from Dave Ramsey, and a lot of you may know him, a pretty well-known person who talks about financial things, and one who's really happens to be one who's very much against borrowing, by the way. But anyways, he makes a very good point here that a college degree or a trade does not ensure a job. That's a myth, according to him. College degree or trade does not ensure wealth. Again, he's saying basically that's a myth that it ensures wealth or a job. So, they're both obviously different tracks to take. And I guess it's important, I would just say, for people at the very beginning, as we talk about ways to make this happen, I just want to make sure that people explore and be sure, and then take a tour. Take a tour of the college, take a tour of what you're trying to do, and think about your motivation. And if you're clear on your motivation, and you've asked yourself, well, am I going to college simply for the money? Am I going for the worldly exposure of meeting people, getting, seeing the outdoors? A lot of people haven't been out of the house in a while. Maybe that's it. Is it to party, or is it to please your parents? So knowing that clarity, I think, will help you in your success of saying, yes, I'm going to college, and yes, I'm really going to do what's necessary to pay for it, because this is not usually something for the, as they say, the faint of heart. And if you're ready to go and with a full commitment, then I'm ready to talk about ideas once you clear that this is the thing for you. So thinking of major purchases, and this is one of them. Other ones obviously include like cars or houses or other types of things, going on a big vacation or something. But I'd like you to think about, and we'll talk a little bit about the variety of methods and the time available. In part, some of the choices you'll have here, you have, or your child might have, makes a difference on when you start, and you'll see some of those. Obviously, again, some things are pretty clear. The quicker you start, the earlier you start, the greater timeline you have to make decisions and to get the compounding of money, as an example. Time also allows you to examine and explore how to lower your costs by doing certain things in high school, as an example. You can't, in your 12th year in 12th grade, all of a sudden go back and take an 11th grade course that might have also counted toward college. So again, thinking ahead will give you some advantages. Always research and ask what you should be aware of. This is a case, again, I'm here in the awareness business. I'm here trying to promote some ideas and awareness, but in some cases, as a lot of things in finance, people don't know what they don't know. So please, raise some questions. I'll do my best to answer them. Always search for free first. I always like this. It's one of my wife's favorite words, free. Search out free first, and then seek out what the competition is doing as well. Meaning that sometimes by looking at or competing one institution toward another, it might be another way for you, as there seems to be a little bit of a downturn in attendance this year for freshmen. So that might be to your advantage. And then finally, place it into a SMART goal format. We'll talk a little bit about that as we go forward. So let me go into a few more things here and then turn it over to questions for Maddie to see if there's any questions that come out. I also have some questions that I caught from the group, so I'll bring up some of those in a moment. So let's start talking about some common purchase traits to think about on this large investment into college or university. First, that since most people generally do not have, $50,000 in cash to pay for tuition or whatever it might be, it's ideal that we've saved ahead of time. So you'll see that most of the time, as you probably know, your purchase of education is going to be a combination of savings and borrowing, right? And our goal and things obviously we'd want to think about from a financial perspective is to do what you can to save as much as you can. Let time increase your money by compounding your money. Do what you can to decrease the borrowing side. One of the biggest challenges I see, again, and I've done lots of things, for instance, helping people buy their first houses, just as an example. And when people aren't thinking on the longer term, as an example, and they borrow so much in college, they may be left in a situation where they don't have money left over to then buy the house when they're 25 or 26 or 27, because they're really saddled in so many school loans. These are all choices to think about, not just in the short term, but in the long term. So planning ahead gives you more realistic choices. More time gives you the ability to have more choices, and that's what we want. So today's coverage is really about these four things. I'll talk about various financing options. Again, things that I'm aware of, some of the basic ones that are out there for you to pick from. Ways to lower or eliminate your costs. It's always good, not simply, not paying where you don't have to. A couple cautions and risks, and then what we call a SMART goal. A SMART goal is nothing more than a way to put a goal so that you can actually make it be fulfilled. So lack of time, if you haven't thought ahead, I don't know what your timeline for you folks are, but time is great because it gives you the time to earn and save money. It gives you a time to grow through investment and or compounding, and then time allows you to explore all the options you have available to you, so you can make calmer, more thoughtful decisions. So one of the things that will also help you today is I've included a handout, just so you know, and it's called Paying for College. It's one of the things that's going to accompany this, so that when you do get your final, I think you're able to pull it up now, but you'll also get it at the final handout that you get from us. So let's start out by talking about some of the financing options, and then I'll break for some questions and take some of the things that you asked in the registration. So the starting point for education, and again, these are things that you may know or you probably have experienced wherever you might live. Again, we have people from, like I said, 8 different states, so I know that there's different costs in college. I happen to be in the Boston area where costs are pretty high. We have lots of colleges to choose from, but there is also a lot of costs. So on average, throughout the nation, the federal loans are the most typical ones people take, 1.5 trillion in loans out there. And the private side, where you go to a private bank, is far, far less. It's less than 1%. It's really 0.5%. So people choose that. And I think the main reason is because largely that's generally more expensive than what you get through the federal, okay? In looking at prices that you have to pay, again, these are just averages, probably no shock to people. But in general, when you have college and you add room and board, and that's a tip, by the way, one of the greatest ways to reduce your costs is not pay for room and board, find some other alternative. That costs you $51,000 a year. Typical in-state costs are $22,000 a year. And by the way, there are things that are called regional. Sometimes states gather together in a regional, let's just say like New England as an example, and they share the same lower costs of an in-state cost being in a region. So be looking for that as well. Another nice way to get in, as I call it, kind of through the side door, the back door, is using community colleges, often very inexpensive, and often a way to get yourself in a larger 4-year college or university. So those are some of the costs. Most parents, as you can see, typically say that they need financial aid. So the good news in this picture, even though it's a lot of money, is that there are many ways to save, there are many ways to borrow, and there's many ways not to spend money if you don't have to. So let's talk about some of the borrowing things, and then I'm going to open it up for questions that you might have. So starting out with some of the financing options. This is when you are utilizing, again, if you look at our brochure or the handout that I have, it lays it out this way, which I like. It puts it in the order of free money first, always find what's free. Number two, use your money. That's when you do savings or work study or a job. Or number three, use their money, the federal or private student loan. So here we're talking about federal options, and there's a number of types of ways that they offer loans to you or to your child. They call them either direct subsidized or unsubsidized, which simply means, are they paying the interest or are you paying the interest? So these are loans, let's be clear, but they're loans that generally are lower interest rate. Subsidized and unsubsidized Stafford loans is another form. For parents just taking out loans strictly for their children, but it's really they're fully paying for it themselves. There's a plus loan. And then either more than likely after your child is through school, you can start thinking on these federal loans of how you can consolidate them. And so that's a common thing to do. I know that from my own experience, over the course of the 4 years, I have 3 children, and over the course of the 4 years, you may end up with, let's just say, 6 or 7 different loans. And you can combine the federals. You can't combine federal and private. They're separate, and you don't want to do that. I'll tell you why a little bit later. Of course, you have to pay them back. These are loans. They're not scholarships. And the good news is they are typically lower rates than private. So this is the attractive part, that, as we all know, the federal government has lots of money. At least it seems that it does. The question, of course, is how you pay it back and what rate. And so typically you have the 2 types for federal. Pay it back based on time, 1 year from now, 5 years from now, 10 years from now, that kind of a thing. Or based on your income. As you now get a look for a job, they can make the payments based on the money you make, based on things like income-based repayment or other forms of payment. So again, some of those are covered in the brochure that or the handout that I've given you. The last thing I'll say before I break for questions is this ugly little guy, COVID. He messed up a lot of stuff last year, and made things challenging in a lot of ways, but maybe there's a few bright spots that I would say that do come out of this, and that is this. Due to COVID last year, there has been greater acceptance to schools. In other words, schools are a little hungrier this year for people. There's been a number of people, I've heard figures that say the enrollments are down by in some cases down by 25%. So what that means for you who are still targeting college with yourself or your children, it may be an opportunity for you to get into a school that maybe you couldn't before. But the sad news is that a lot of them have not lowered their costs. I did some research, and very few that I've found have lowered their costs. As a matter of fact, a lot of them lost money, so much money last year, they're trying to make up. You can still expect a lot of technology, a lot of remote and virtual options. I know the good news is we're about all ready to take our masks off soon, but the virtual options will still be here to stay. It has not really decreased the costs that I've seen. And still, what's unfortunately true is a disproportionate access to people of color, that there has been continued unveiling, unfortunately, for people of color, where there has not always been equal access to technology and the kinds of things that are needed to help in their communities, to allow people to have access both on the graduate and non-graduate level, and certainly in the pre-college, high school level, and so on. So there's a combination of obviously good and bad news there. So what I'm going to do, I've just hit you with some kind of general information up front. I'd love to get some questions from you, and I'm going to open it up by just asking this: are there any questions? And that will open up a dialogue for you. And then Maddie will help me with some of these as they come in. And in the meantime, I will begin to answer some questions as well. So in the registration, so I'll do this until Maddie cues me. Some of the questions I saw, for instance, in the registration, one person asked, what percentage of a fixed income is good to save? Okay, that's a good question. What I'd say is that, again, there's no specific amount. I'll start by saying ideally people save 20% of their income. Now that's what's recommended. Is it realistic? Probably not. I would say most people should be saving at least 10%. Sorry, whoops. So about 10% is about right. It's more realistic. The bottom line is, for college or anything in life, there should be savings because of the uncertain things that happen, number one, such as things like COVID all of a sudden took jobs away or reduced a lot of our incomes. We lost hours. But just because there's lots of things, especially in your 20s and 30s, that begin to add on to your debt. So that was that question. I don't see other questions coming in for right now. So let me go on and answer another question, and then I'll continue on with our discussion. Another one asked, this is from Ohio, how should I begin? There's the College 529 plan, for instance, or a trust or an IRA. Now, I will be talking a little bit about that in a minute, but I'll just start by saying one of the methods that you may or may not know about is the 529 plan, which allows us to do savings that's put away. And the savings is a case of where you basically put the money away and you contribute after-tax monies. So after it's already been taxed, you contribute it to a 529, and then of course at the time you use it, there's no taxes on it. So it's basically paying now, but you get the savings later. The comment I would make about it for folks is to realize, if you do a thing like a 529 plan, which is great, the only downside I can think of is that that money has to be used for college expenses. If you did another thing, the person said, like an IRA is used for retirement, but I understand that you are able to withdraw monies you've put in to an IRA. So again, if somebody may think about, well, what's right for me, I can't really tell you that. You got to think about if you want it directed strictly for education, or if you feel at some point you may need access to that money, then a 529 plan may not be the right thing for you. Okay, so no questions coming in. Let me move on with a next part of our discussion here, which goes at what I call lowering the costs, right? So this brings us to the early savings. So obviously, if you can do it, I don't know how old your children are, or if this is, or again, if you guys are the kids thinking of college, or if you are parents thinking about your children, obviously starting early gives you a time frame for both either 529s or Coverdale ESAs. Those are just simply forms of tax beneficial types of contributions you make, where you make them, and it allows you to save money so that later on you don't face the taxes. So maybe a timing issue. If you have a good amount of income today, but you don't think you'll have a great amount of income later on, that could be the kind of planning you're thinking about. Applying for scholarships, of course, and that involves this thing which I always have a hard time pronouncing, called the FAFSA. I can't even say it, but believe me, I had to fill them out every year, and I hated it. I tell you all, as parents or as kids, it's no fun to do, because it's like I don't know how many pages long. The thing seems to go on forever, and it asks you a million questions. But for anyone trying to get your kid into school, it's pretty much an essential thing for you to do. You have to fill it out. It opens the door, once you do it, to gaining all kinds of financial aid. And it opens you up to certain scholarships or aid from the school. I'd say by all of the best advice I can give you is certainly do that. And the other thing to say too is recognizing, back to about this discussion about COVID, if you had issues last year that reduced your income, that affected your job, like for instance, I myself, I was on furlough from April through the rest of the year and didn't come back till January of this year. If I was applying for FAFSA, which I'm not now, thankfully, my kids are grown and out of school, but that would be a great example of where they would very much consider that as you are trying to apply for school. So it's a great advantage to you. That COVID word does get reaction. I mean, be honest about it, but still, it's something that there's lots of funds for that. Another great thing, the bullet point number 4, I've mentioned briefly, but recognize that going to community schools, in-state schools, is often a great advantage to folks. Again, you saw the numbers earlier, you probably know this, but what I think is even more exciting is the fact that, again, a smart combo is to maybe start out in an in-state school. And I know here again in the Massachusetts, Boston area, many people start out in a community school and then transfer to some of the more well-known schools like Boston University or Boston College or MIT or whatever colleges that are allowing those transfers. It's often a good way to get in. I already mentioned about the whole idea of not including the room and board. It definitely increases your bill excessively for a child to live at school. Now, again, I know that that's often one of the benefits is to get away from home. I fully understand that. I had 3 kids, and I understand that. That's all part of the decision making of the cost for school. That it's more than simply an education. It's independence. It's a chance to kind of see new people and new things, and how you do that is a question of how you kind of balance your expenses too. But so that's why I like to point out that maybe an apartment, a local apartment with 5 kids in it, is a great thing. Learning how to cook certainly saves a lot of money from people going out to eat. As a counselor, one of the more expensive things that I see a lot on people's budgets, and again, this was more pre-COVID, but it's happening again, is just excessive amount of money in going out to eat. Learning to cook and doing that is far less expensive if you will do that and take care of that on your own. So again, maybe this is obvious, but it's the kind of thing that people often don't think about that they can do. Another way to lower costs is for your child or for you, whoever you may be, to take advanced placement courses during high school. Again, this is why I'm saying I'm hoping that if you're a junior or your child is a junior, this is the time to be thinking about it. As a sophomore or junior, what can I be taking in high school that gives me, I love this, I always love this word, a twofer. It gives me the credit in high school and it gives me a credit in college that I don't have to take, or take a CLEP test, which again, it's a college level test, which again allows you to test out of certain classes. I remember one of my good friends doing that, and I didn't understand it. My parents never told me about it at the time, and I know he tested out of at least 2 or 3 classes as a result. We went to the same college, but he tested out. So therefore, he didn't have to take some courses that I did because he's already done that. So, these are smart things to think about. A little bit of planning ahead. If you don't know about them, ask about them. Find out what your schools do. Find out what your high school does. A guidance counselor will certainly help you with all of this type of information to recognize that these are all ways to lower your costs. So again, just summarizing this slide at the top, this is your money at the top, savings, 529s, Coverdales, but it's a way to use your money in a new way with a tax incentive. The scholarships and FAFSA hopefully lead you to free types of opportunities. Then in-state and all the rest are ways to lower your costs. Okay. All right, so I do see one comment here. My kids has to take AP classes in order to graduate. Okay, well, then the great thing there is maybe you can find a way to leverage that. So it's a good thing to do a little research, and maybe you'll find out that a local college, a local community college, or wherever they're thinking of, will honor those. And if they do, That's a win-win. They've taken the classes in high school, and then they go to a local college, and that in fact allows them to gain not having to pay as much. One of the things again is that happens sometimes, and I think my son kind of dealt with this. He ended up going to a local school called Northeastern, and ended up going for 5 years. So I mean that's often a common thing, but still 5 years of school obviously costs 1/4 more to go to 5 years rather than 4. If you can get that college down to 3 or 3.5, you've saved money that way. So those are all good things to think about. Okay, good, thank you. All right, still on the whole idea of lowering costs. And again, I'll open it up to questions you may have. I want to hear what your thoughts or your questions might be. I know there's a laundry list of these, but this is something for you to keep, but I wanted to highlight just a few of these. So the first one I have is negotiate financial awards due to COVID. And I was mentioning that. So I'm just reiterating the freshman class in some areas is down 25%. A lot of kids are taking the year off. A lot of people have had their fill of 1 year's worth of looking at a screen, and they're looking to get out and go on a trip somewhere, which you can't blame them. So that might mean a good thing for you. If you or your child are going to school, you have greater room for negotiation. The schools might be looking for enrollees. So you pick between school A, B, and C and play them against each other and see who will give you the best deal, who will help give you the best scholarship, who will help support them. Number 2, the dual enrollment, I already mentioned. There are some classes, like we talked about the AP or others, that allows you to gain the credit on both. I already mentioned plan to graduate in 4 years, if you can, or less. I like some of these other ones. I mentioned the regional or multi-state tuitions, very much like in-state, so keep an eye out for that. Again, it depends on where you live. Again, I saw some where people are coming from in this particular, again, this audience today. I see Indiana, Illinois, Arkansas, New Jersey, New York, Ohio, Pennsylvania. You probably all have your own in-state or regional issues. It's a matter of just looking for it. If you haven't had a kid go to college, here's a big surprise for you. The costs of textbooks are outrageous. My last child graduated, I think, 2 years ago. Thankfully, she's now a nurse doing quite well. But, you know, the cost of textbooks are usually hundreds of dollars. So be aware of renting them or getting them digital, getting used books. There's ways to reduce your cost there, which you really don't need to have a physical book. I mean, what happens in most every case is you end up with a stack of books like we had that they do not take books, used textbooks usually at bookstores, number one. They don't want those. And you might be able to sell them back to the school, of course, but they give you like 10 cents on the dollar. So it's, you paid $200 and they may give you 20 bucks for it. Other ones, like legacy history, if you have folks that have gone there before you, by all means use that. And you know, it's a case of if you have a primary relative, it won't work for someone who's, you know, a second cousin once removed. It has to be someone like a parent or an uncle or an aunt, something like that. In my case, again, my son went to Northeastern, I had mentioned, and his grandfather was also a graduate of Northeastern exactly 50 years prior. So it was kind of an interesting thing how that worked out. Look for work study programs and become an RA, resident assistant. Those are various ways to do it. I point out just a few others that now with federal loans, when you're getting to the repayment side, you may or may not know this, but this is still in force. If you take out federal loans, there's ways for you to get teacher loan forgiveness or do public service. Again, my other son, did do this and ended up working at a school, and it was a state school. So he worked at a state school and therefore got eligible for loan forgiveness. So that worked for him. Different things. This take a gap year, I like to point out, if there's any uncertainty, as I started off our discussion today, I talked about, I think the importance of being committed to going to college is, I think, very important from a financial and a success point of view. If there's any doubt, I think there's no downside for taking a gap year. It allows your child to think about, volunteer, intern, get further experience, and then face college potentially with a maybe more seriousness or dedication. Again, that's obviously a relatively inexpensive way, and you could be building money at that time. So I would just say don't rule that out as another option in your toolkit of options. What's interesting, more and more SATs and ACTs are not required. Those are always very challenging, and what those are, of course, if you don't know, are tests that are often or have always been requirements to get into most colleges. But what I'm hearing is they're not required, but if your kids do take them, it gives them kind of an advantage. So I'm not saying to rule it out, but the good news is it gives your child a little bit more capability to potentially get into a school. So Maddie, I'm going to ask again if there's any questions and see if anything comes in. Are there any questions? This will open up the dialogue for you. Send one in, question, comment, see if anything comes in. In the meantime, I'll wait for Maddie, but I'll also bring up a few more things that people asked in the very beginning. Let me see, somebody, yes, they did ask, what is the highest interest rate accruing college savings plan? And I have to admit, honestly, I really don't know. There's various plans like the 529 and the Coverdale that I mentioned. And all I can say is you need to check your own local area, your own state, to find out what the rates might be. They are often different, and they often are different too according to your own income levels. You might find different types of advantages based on, they often call it area median income. According to where your income might be and where you are, you may get better rates than others on the cost side or on the borrowing side or on the gaining side. It depends on which side you're on. Let's move on then. I'm not seeing any questions coming in. Let's go on to what I call cautions and risks. I want you to be aware of these. These are things that do sometimes come up in the whole course of people thinking about their finances. Bankruptcy is one thing that people sometimes think about. And I don't know if you've heard this, there's with bankruptcy, again, it's not that we're advocating it, I'm just trying to give you information, that when people are hard pressed, there's a few things in life that cannot be erased by bankruptcy. And that is taxes, and up until now, it's been student loans, and then also paying for a child support. So those three, bankruptcy can't get rid of those. But up until recently, now they just changed that for student loans, meaning that, again, I'm not advocating, I'm just giving you information that if you pass what's called the Bruner test, and let's just say you had a tough time with COVID last year, and you could show that you and your significant other both lost your jobs or had challenges, someone passed away or sickness, but you've tried to pay, they could very well erase your loans as a result of that. Now, again, just realize this is new. Up until 2 years ago or so, the student loan debt could never be taken away by bankruptcy. Over promises, I'm trying to show another little bit more reality. Caution and risk here is that many schools and industries will claim that you'll increase your income. And again, I've seen many stats, and that's why I shared some of these with you. But I think you have to get the key word here is the word will. I think the better word is they may increase your income and may guarantee a job. From my experience, I'll just share with you quickly. I've been in corporate life for many, many, many years, and I can just say honestly, my college education, which I got, which was a great one, never ever came up in my over 30 years of of time with a corporate company, a big, large company in the Boston area. It never came up. The only thing that ever comes up is, are you able to do a job? Are you able to get this job done or function done? And then I point out also here, which I've seen because I'm now obviously a homeowner, I see so many of my friends who are blue collar and they have a high school degree, but they're doing fine. So I think these numbers have to be taken with a grain of salt. Pursue college, like I said in the past, if it's great for you, you want it for a lot of these various reasons, but making money is not the only reason. It's not a guarantee. You may make more, you may make less. So hopefully your reasons for college, I hope, are multifaceted. There's many reasons to go to college. Income may be one of them, but again, there's no guarantee. Finally, I just talk about consolidation. I mentioned it earlier, but just realize I learned this again through personally, not just here through my studies, that if your child does end up having a mix of the federal, like subsidized loans or Stafford loans on the federal side, and then you also got like a private loan, like a PLUS loan is like a private loan. You can't mix them. Let me put it another way. You could mix them. You could get rid of them all and take out one solid loan with a bank. Let's just say Citizens Bank or Bank of America or something. But then anytime you go to look like under the Biden administration, they were to reduce loan debt, chances are they would not reduce it because you've in a sense gotten rid of your federal loans. Your federal loans intact are the ones that would be the ones that they would forgive. Chances are if you combine it, get rid of them, and now go to a private loan, you've basically gotten rid of that particular advantage. Okay, hopefully that makes sense. If it doesn't, please ask a question, or you can always write me again. I've given my email. I want you to have that as well. Okay, so let's go on to the next section. I'm not seeing any questions here yet. Let me talk about the SMART goals, and this is a good thing for not only for education, but it's a good practice for anything you do, by the way. What the SMART goals are is simply a way for you to make a goal achievable and real. And what that simply means is people say lots of times, oh, I want to be rich or I want to be famous, but then they don't do anything about it. So a SMART goal is a way to translate an ideal, a goal, something you want to do into something that you can do and do. So let's look at an educational one. Specific, I gave an example here, the S under specific. In detail, people would understand that. I'm applying to Plymouth State College. I made this college up, by the way. It's $5,000 tuition. I'm going to live at home, apply for work study at Plymouth State College. So I'm specific about what I want to do. It's measurable. Can you see what are the numbers with it? How are we going to make this work? What are the steps? So I'm going to continue to work at Amazon where I'm working, make $4,000 by August. In June, I'm going to start a work study, and if accepted, or if there's overtime at Amazon. So I'm looking at my options. I'm trying to play either a local working at Amazon as an example, or trying to get a work study going. Maybe I'll do both, but at least I kind of am playing out my options, see what I can do to make money. I know how much I need. How am I going to get it? Achievable. You really want to actually make this happen. You can't just sit at home and pray for it to happen or just wish it to happen. You got to get up and go over and talk to managers. So I've said in May I'm going to talk to this manager. I'm going to look for the overtime here and actually talk to my counselor, set a date with them to talk about the work study options. Realistic. This is part of your own recognition of your own spending habits. I throw that in here. This person, as an example, has to make $5,000 for tuition. So they're saying they're going to make $3,000 in a month between May and August, between one or both of these options. They recognize they have other bills to pay, right? That's reality, but they're going to save at least 1,000 of that. They already had 1,000 in savings, so they know the math. You can do the math and say that I need $3,000 plus 1,000, and then finally through all that, I make my June decision, time bound. I'm going to have this all done by June as to what I'm going to do. I'll reach my $5,000 goal by August 15th or something thereof, which again, I've put together a plan that's realistic. So a SMART goal is a great thing for you to think about. take your own college experience or your own goals for college and put it into this format. It will be a lot more achievable when you start to think of all these elements. I'm going to come to our summary and then open it up for questions one last time. And I like to just kind of think of all these things as a way to end us up. The summary for what you're trying to do for college or anything large like this is, I start out again, is that you're very clear on the why. I mean, you, your child, you know clearly why you're going to college. So that's already a done deal. We already know that. So now that you've determined that, so when do I start doing things? Well, now. There's no time like the present. You plan ahead. So hopefully if I don't know what your time frames are, but if it's 10 years before you go to college, in other words, you're 8, you got some time to do some savings and gifts and improving your credit, right? If it's 1 year before your college, you have a little less time, of course, to do these things. Credit is very important for parents, especially if you're going to take out plus loans or other loans or co-sign on your child's loan, as an example. Improving your credit is something you always can be doing, which allows you to borrow at a cheaper rate, which saves you money when you pay less interest, of course. Who? It's not just when you do things, it's who you know. I think this is true in life, by the way. Talk to people, build and leverage networks, talk to your friends and families and colleagues at work, and ask what they've done. Where have your children gone? What did they find? What worked for them? Oh, my child went to this college in Pennsylvania or Ohio, and this is how it worked for them. Oh, great, okay. Then you learn about things. You never stop asking questions. The information part of this is endless, but you may not know what you don't know. So it's a matter of educating yourself and your child as to what's out there, compare, play one school off against another is part of I'm sorry, but that's part of the reality. You can do that. And then the how is learn how to follow the steps. Look for the chances of where you can do 2 first. So if you're in high school now, or your child is, ask what you can do now in high school that gives you certain credits or certain ways to take away classes in a local college. Again, that saves you lots of money. Not having to pay tuition on a college semester is fantastic. That will definitely save you some money there. I leave you with this website here, and I highlighted a bunch, but the main one I really wanted to point out, obviously the big one in blue, is recognizing if any of you are struggling with money or how it all might work. If any of you have ever bought a house or used online what's called a mortgage calculator, this works the same kind of way. You plug in all the factors of where your money could be coming from. This much might be borrowed. This much comes from my grandmother. This much comes from my savings. This comes from my planned job that I'm doing. This amount comes from this loan I'm taking out. Then you are left with, through all those factors, a monthly projection of what's left over. It's just doing all the math and helps you to think it through. It's just a what if. It's a what if, and it helps you to plan, parent and child together, or whomever is doing this planning, and allows you to think it through and actually start to see, how can I make this a reality? Other websites I have listed here, just many to think about. They're great, and you can dig into them on student loans. If you're thinking of becoming a veteran, again, of various ROTC or other types of programs, there's ways to save money through that as well. There's some great things for you to look at. I'm going to end us up by saying simply, I thank you so much for joining us today. I hope this information was useful. Again, as a repeat, you will get a copy of this webinar. You will get a copy of the PowerPoint slides that we have here. We have the actual handout called Paying for College, and then an evaluation, which we hope that you will take a minute to fill out and give us further feedback. Our next class we have coming up, just so you know, is June 9th. It's on the home buying process. I used to be a first-time home buying coordinator, did that for 2 years, and I'm proud to say we had 600 kids in our class in 1 year, and it's 200 houses over that class bought 200 houses. So, you know, can't claim direct responsibility for it, but I know that we influence those purchases. Thank you so much for your attention. Hope to see you in a future webinar that we're doing. Thank you all, and good night wherever you may be.